One of the biggest new narratives in crypto today is layer 2s. Today, we're going to be breaking down the top 3 layer 2 protocols and tell you why they're so interesting and why you need to dig into this.
Vitalik Buterin calls layer 2 protocols the future of Ethereum scaling. We're going to do a deep dive into the top 3 layer 2s, Coinbase, Arbitrum, and Optimism.
Welcome to the Bean Pod. This is your place for all things stocks and crypto. From beginner tips to expert picks, use this as fuel for your investing journey, because when you're in the know, your money will grow.
This episode of the Bean Pod is sponsored by KyberSwap.
KyberSwap is a DEX and DEX aggregator, which is built to facilitate all your DeFi needs in one single platform.
Fast, cheap, and safe.
User experience is KyberSwap's sole focus to make everyone's life better in DeFi. Welcome to the Bean Pod. This is Shane, aka the Jolly Green Investor.
This is Josh, the Nifty Investor.
Today, we're going to be taking a deep dive into the top 3 layer 2 protocols:
Coinbase, Arbitrum, and Optimism. Throughout the episode, we are also going to be dropping a hidden gem that we found in one of the ecosystems that we want to alert you guys about. We will, in a future episode, do a deeper dive into each ecosystem and find you the top 3 hidden gems in each one. But for this one, we want to give you an overlay and help you understand what these layer 2s do and why they're so important for the future of crypto, specifically Ethereum.
That's right. So we saw what Vitalik Buterin himself, the founder of Ethereum, came out and said recently. He said that layer 2s are the future of Ethereum scaling. Now, the reason he said that is because, really, Ethereum has become a victim of its own popularity, right? It's become so popular, so quick. It has so many people using the Ethereum network that it just can't keep up with the transaction speeds and the gas fees. If you try to use Uniswap Ethereum, the gas fees, even nowadays when we're in a bear market, $30-$40, it's crazy. So what you need is these layer 2 protocols, which go on top of Ethereum and help scale out the Ethereum network. So you're giving access to Ethereum dApps and DeFi, but it's in some cases, much quicker. In some cases, much cheaper, and in some cases, a lot more seamless than the Ethereum. Even though they've moved to Ethereum 2.0, it's still not nearly at the scalability that it needs to be. This is why Vitalik himself has said layer 2 is the future. So today, we're going to talk about the biggest layer 2s you need to know.
Yeah, so transaction fees right now are killing Ethereum in terms of its adoption. And you can imagine it almost like maybe something like a funnel, right? Like so you have like this funnel and you have all these transactions coming through. If you have a few coming through, it'll go right to the spout, easy. But the moment you have all this popularity and all these dApps being built and all these transactions occurring at once, to get through this funnel, you need to pay more money. So you got to pay a lot more money to get through. So that's why the gas fees go up. But then what also happens is it gets congested and you have too much going through at once. So these layer 2s, they have a specific technology that allows the transaction fees to be cheaper. They allow the transactions to be a lot faster. What these guys will do is the transactions will be processed off chain. So it's all happening away from Ethereum.
Yep.
And then it'll be settled on the main net of Ethereum.
Right. And there's a couple of different ways that these layer 2s are all similar, but they're different, right? So we will get into some of the technical aspects of the different layer 2s, the different approaches that each company is taking. All right, so if you believe what Vitalik says, layer 2s, we can already see this is a huge narrative building in crypto. So what you want to do is look at layer 2s. What are the most dominant layer 2s in terms of handling transaction value, or TVL, on the Ethereum network? So 80% of all layer 2 transactions on Ethereum right now are between Arbitrum and Optimism. Arbitrum has more than Optimism, but 80%, that's significant. Arbitrum and Optimism combined actually flipped Ethereum itself in terms of TVL at one point. So and I feel like most people in crypto don't know about Arbitrum and Optimism, right? But they need to.
It's almost like it's relatively new in a way. Like,
yep, for sure.
There's some projects that launched on these ecosystems that saw like 200 to 300% gains over the past few months because this narrative has just hit. And it was a lot of it was spurred on too by Coinbase announcing that they were going to be launching their own layer 2 known as Base.
That's right. So that's kind of the third one we'll talk about. So why don't we start with kind of Arbitrum and Optimism, and maybe, it might get a little bit technical here just to describe what layer 2s and how they kind of differ and are also similar. So when you talked about the transactions being processed off Ethereum, so there's two kinds of, it's called roll-ups, right? They imagine them rolling up a bunch of transactions off the Ethereum blockchain and then doing the hard work and then sending them into Ethereum back in, so it's more scalable. So there's rollups, optimistic rollups, which is what Optimism and Arbitrum are, and there's also ZK rollups. Now we've actually talked about ZK rollups quite a bit on this show in the past with things like Mina Protocol, who is one of the leaders in ZK. But today I think we're gonna talk about optimistic rollups and kind of, if you want to kind of deep dive, not deep dive, shallow dive into the differences between the two, Arbitrum and Optimism.
Okay, so Arbitrum right now has $3.3 billion in total value locked on Ethereum. It actually has 55% of the market share on Ethereum. So it's important to understand what Arbitrum does and understand this ecosystem, because we are going to do a deep dive into the projects that exist within this ecosystem, which we believe that could see some 10 to 20x gains.
Yeah, we got some serious gems. So make sure you're subscribing to the channel, because when we do the top Arbitrum ecosystem gems and top Optimism ecosystem gems, there's going to be some certified beanstalk bangers in there. But
and we'll drop one throughout this episode, just to kind of give you a hint of what you can expect in that next episode. So Arbitrum lowers network congestions, improves speed, cost, and offloading as much network information as possible, and is stored off-chain. It bundles up multiple transactions into one batch, then posts the cryptographic proof onto the main chain, the Ethereum main chain, and it's designed to be fully compatible with Ethereum, meaning any smart contract that works on Ethereum should work with Arbitrum. The founders, I guess we could talk about the founders. It's Ed Felton. He's a professor of computer science at Princeton. He co-founded Off-Chain Labs, so it kind of makes sense now, like off-chain, that the real hard work occurs off-chain.
Right.
And he was also the CTO in the White House during Obama's administration.
Oh, interesting. That's a good point. When it comes down to it, we're talking about scaling Ethereum, right? So it's layer 2's Ethereum. And one of the reasons why optimistic rollups, and this is now referring to both Optimism and Arbitrum, are so good, because it's so highly compatible with Ethereum. They make it easy to basically build trustless bridges between Ethereum tokens and then onto Arbitrum or Optimism without deploying a new smart contract. And it's very easy to tell how much more user-friendly and scalable this is when you actually use it. So you can add, and what I would recommend doing is adding Arbitrum and Optimism to your MetaMask or whatever decentralized wallet you use. And when you're trading on Uniswap or whatever DEX you're using, it's very apparent how much easier it is and seamless and user-friendly swapping on Arbitrum or Optimism is than compared to Ethereum. It's cheaper. It's faster. It happens instantly, right? You can just see by using it from, the customer-facing perspective, how much better it is.
Absolutely. So by the numbers and, to how much money they're actually saving, $445 million in gas fees have been saved on Arbitrum so far.
That's massive.
So that's just to your point there about maybe getting this set up in your MetaMask, whatever decentralized wallet that you're using. And they have just over 3 million users now are on Arbitrum. So this is a rapidly growing ecosystem. At time of recording last Tuesday, Arbitrum processed 1.1 million transactions, 20,000 more than Ethereum. It's the first time a layer 2 blockchain has surpassed Ethereum in daily transaction count.
That's huge.
So
and another big stat that I wanted to just pop on the end there is it kind of be like a good crypto trivia fact. Arbitrum is now the 4th largest blockchain in terms of overall total value locked.
All right.
If you ask anyone that's, moderately into crypto, you say, all right, name me the top 5 in TVL. They, give you your standard, Ethereum, Solana, blah, blah, no. Arbitrum.
Well, we just, in one of our Truth About Avalanche, we discovered currently they have 895 million TVL. Arbitrum, potentially a lot of you listeners or viewers have not heard of yet, has 4 times the amount.
Yeah, that's huge.
So,
and then it's crazy when we do eventually dive into the ecosystem gems, the altcoins for Arbitrum. When you talk about a blockchain, a layer 2 that has so much activity, so much TVL, some of these gems that are playing key roles in the system, like the DEXs or the Launchpads or whatever, the market caps are tiny. The potential here is massive.
And that's because people are only just starting to discover these projects now.
And it's like the extra step, one extra step when you're building a business, an app or a landing page, one extra step, one extra click will get rid of 50% of your potential users.
Yeah.
The fact that MetaMask doesn't come loaded up, Arbitrum's not there and you can't just like, oh, Arbitrum. Oh, I have to add Arbitrum to MetaMask. That one step alone, I think, is just like, it's keeping 50, it's a gateway. But we always talk about when something is a little bit more work and harder to get into, that's when it's good, because eventually the masses will flood in. And at Beanstalk, we like to get in before the masses.
Absolutely. So let's have a look at Optimism now. So Optimism, 1.8 TVL, total value locked. Again, this is twice as much as Avalanche, as we recently discovered in our previous episode where we did a deep dive into Avalanche. Optimism has 30% of the market share.
Right.
So this is another layer 2 that's completely dominating. At the end of the episode, I kind of want to highlight which one I think will be the winner in both, because they both take a different approach.
That's right.
So Optimism is a bit more open sourced. It seems like they're trying to build, I think they called it a super chain.
Okay.
So Optimism is building a super chain. So they're looking to create a future based on collaboration versus competition. So their approach, which is why Coinbase has built Base on Optimism, is because they see it as a place where it's almost like a layer 0 in a way, where Optimism can be the place where everybody comes to, whereas Arbitrum's taking a very not one dimensional, but
It's closed off.
Yeah, it's our way, and it's going to be more proprietorship. It's if you want to build on us, then
Right.
it's a bit different that way.
Yeah, for sure. And so Optimism has a token.
Yes.
Right. So they did a free airdrop to users in, I think it was June of last year, 2022. So Optimism has a token, and one that I've been trading a little bit lately, the OP token. So that sets it apart from the two other layer 2s we're talking about today. Just the fact that it has a token already launched. When you boil it down to really simple terms, Optimism is faster than Arbitrum, but Arbitrum is cheaper. And, again, going back to just straight consumers, what do they want? They want faster and cheaper. So they're both layer 2s. They're both looking for scalability, but they're taking different roads. Arbitrum is cheaper, and everyone loves to save money. But Optimism is faster, and everyone loves fast transactions. And depending on what kind of DeFi, what dApp you're building, you may prioritize speed over cost or cost over speed. So it's interesting to have both of these ecosystems and also to have exposure to both in your portfolio.
Yeah, absolutely. So this one has saved $2.8 billion in gas fees so far. I think that's because Optimism also was first mover as well.
Yep.
So like I said, they're trying to integrate an otherwise siloed layer 2s into a single interoperable and composable system. So anything being built on Optimism can be fully interoperable with one another.
Right.
Versus other layer 2s that, have a specific set of standards, and then you maybe need a quant or something to interoperate. Yeah.
And it's interesting how you mentioned the different ways they're governed, right? So Optimism Collective is a DAO. So it's governed by DAO holders, people that hold, whales of op and stuff. So it's kind of collectively a bit more decentralized, I believe. Optimism is known to be when you compare the two, because it's decentralized, governed by the DAO, whereas Arbitrum is run solely by off-chain labs. So maybe a little bit more centralized.
Exactly.
And, when you come to talking about real crypto heads, they do like sometimes the decentralized ones, as we saw with the Hedera Hashgraph hack lately. They turned the chain off, right? That's not decentralized.
Right.
So, it depends on which one. Do you prefer Arbitrum or Optimism? Do you want to go for the one that's decentralized, or do you want to say the more centralized approach, which has its advantages as well?
Yeah. So right now, Arbitrum does have a higher total value locked, and it's nearly twice as much. They have a bigger market share. But with Optimism being open source, permissionless, and we have Coinbase building on there, are they going to start bringing in so many new projects being built? Are they eventually going to surpass Arbitrum in terms of total value locked?
Yeah, time will tell for sure. So now we've kind of given an overview of Optimism and Arbitrum. Why don't we talk about this new one? Base by Coinbase.
The Coinbase is layer 2.
Coinbase is layer 2. I mean, it makes sense. So you're talking about one of the top 3 biggest exchanges in the world. They're launching a layer 2 blockchain to help provide. So this is a key distinguisher for me. Arbitrum and Optimism are Ethereum layer 2s. Coinbase Base is aiming to provide an on-ramp not only to Ethereum, but for Solana, all kinds of other layer 1s. So it's similar, but it's not. I wouldn't say it's the same.
So with this, you know, like Coinbase is regulated, right? They got coin, it's on the stock market. With this one, I can see, you know, a little bit more like the KYC, the know your customer before being onboarded into a decentralized little world. I like what Coinbase is doing here, and just look at their numbers. They have 110 million verified users that are now going to be coming onto Optimism. They have $145 billion in quarterly volume traded, 80 billion worth of assets on the platform. They operate in 100 plus countries and have 245,000 ecosystem partners.
Wow.
And it's US regulated.
Yeah, that's pretty good.
So I think this one will onboard, you know, potentially the most amount of people
To Optimism.
Yeah.
I mean, but just like the base. So similar to Arbitrum, as we mentioned earlier, based by Coinbase. Coinbase has no plans of launching a token. You know, they're a publicly traded company. You can buy the stock. No, you know, they don't need it for gas fees. They're using fiat for gas fees, or they're paying for it themselves, right? So it is worth mentioning that the testnet was just launched. So this is still ways behind Arbitrum and Optimism in terms of adoption. Still very much in the testing phases. It did have kind of a rocky launch. They launched the testnet. It was down. People couldn't build on it. It was kind of a bit of a failure, but it's okay. It's a bear market. People forget about it.
The reason I like what Coinbase is doing too here is a majority of their products are written not as smart contracts. So if Coinbase wants to be the leader, and the fact that they're now transitioning to Web3 and making their products more on-chain, I think this says a lot.
Yeah, I mean, so when it comes down to like simplifying what Coinbase is trying to do and why it's interesting to an investor, they're building an L2 to onboard to a bunch of different blockchains. This is from their website. I pulled this. Secured by Ethereum, because it's, you know, L2 based mostly on Ethereum. Empowered by Coinbase, which is, you know, 110 million verified users and 80 billion assets in the Coinbase ecosystem. Big features, easy to use, small fees, and open source. So Base is also trying to be decentralized, permissionless, and that goes into their lining up with Optimism, not Arbitrum.
Yeah, absolutely. So these are the three big layer twos, if you will, right?
Yeah, definitely. There's other ones that are coming up. There's like definitely there's Scale. There's a few
ZK Snark.
Yeah,
I think.
Stark Network. There's a few that we will eventually talk about later at different episodes, but. You know, based by Coinbase, I think it presents interesting opportunities, and I think that's going to be a really good episode when we talk about the Base ecosystem, because it's so new. The altcoins in the Base ecosystem are the altcoins that are being chosen to provide different services to Coinbase for this layer 2 this is all very brand new, whereas Arbitrum and Optimism, although they do have a lot of altcoin gems, people know about them. Some of the Coinbase ones, I think, we're really going to unearth some interesting ones. So make sure you tune into that episode when it does happen.
Yeah, you can go to l2beat.com/scaling/TVL, and that'll give you a list of all the layer 2s that are there. And I can see some of these other ones, which we will eventually dive into. We'll have like a lower cap TVL layer 2 episode.
Yep.
Where there's some up and coming ones like Starknet, for example. That could be a really interesting one. And then there'll be some hidden gems within that. So
yeah, for sure.
Important to keep tuning in.
So, I mean, we did say we were going to drop a hidden gem along the way for the episode. And, you know, it kind of goes back to the way that we like to find altcoins. So we're looking in these. It's very clear that layer 2s is a narrative. We're starting to see the headlines. People are talking about it. All the insiders in crypto are all about layer 2s. So what Josh and I do is look at the Arbitrum ecosystem. Who's the DEX? Who's the Launchpad? Who's the market maker? Who's doing this and that, right? So we want to find all the altcoins that are playing different parts in each ecosystem. But one kind of caught our eye over the past week or so that is not only building it already on ETH and Matic, then launched to Arbitrum, and is about to launch to Optimism, even just receiving a huge grant from the Optimism Fund, right?
Yeah, so, I mean, we talk about how expensive the gas fees are on Ethereum and what these layer 2s are attempting to do. So with this project, it's got a $5 million market cap, which is fucking peanuts compared to a lot of the other DEXs out there, and offers more. The biggest feature, I believe, is the gasless swaps. And I think it was the first DEX on Arbitrum to offer limit orders as well.
Right.
Powered by Chainlink, powered by Uniswap, gasless swaps, Chromatica Finance.
Chromatica, yes. The ticker's KROM. Definitely a small cap gem. I like the fact, you know, I've been looking into all these ecosystems for a while now, and it's an Arbitrum altcoin or it's an Optimism altcoin.
Yeah, it's one or the other.
But the fact that Chromatica is both, and with a tiny market cap, and, you know, you go into their Telegram, you look at their marketing, you look at their roadmap, they're building. They got a lot of stuff going on. And as I just mentioned, I think it's like a $300,000 grant they just won from Optimism. I think it's going to be including gasless, free airdrops, all kind of stuff. So yeah, if you're looking for a gateway into the Arbitrum and Optimism ecosystems, which is the future of Ethereum scaling, as said by Vitalik Buterin himself, check out Chromatica Finance.
They also have, they won Chainlink Hackathon in the fall of 2021. They won an award there. They did a fair launch. No venture capitals firms were involved in that. All their 82% of their tokens are in circulation with a vesting schedule for 3 years. So it's like, if you look at their chart, you can see like there's been no like launch, super huge sell off, like a Casper Labs or something. I like that. You know what I mean? So
sure.
It's, and you look at their usage because they only just launched on the leading layer 2 networks. If you go on, it's called Dune Analytics, you can see how many people are actually using the network and actually coming back. So you can see like the new users plus the returning users. And because these layer 2s just launched, now we're starting to see the adoption for what seems to be a really good project. And this will be, I think, the first of our few small cap gems that we're going to identify within these ecosystems.
Honestly, I'm really excited to film those episodes, the Arbitrum. So we're going to do top altcoins in Arbitrum, top altcoins in Optimism, and top altcoins in the Base by Coinbase. Those are going to be absolute banger episodes. So make sure you're subscribed because we got some serious heaters coming your way.
And if you guys have identified any within these ecosystems that we should know about, let us know ahead of time. We'll do our own research behind the scenes after we go through the comments, and we'll pick some of the best ones and if they're worthy to make the episode or not. So make sure you guys tune into the next episode,
because that one is going to be a banger.
All views expressed by speakers on the BeanPod are solely their opinions. You should not treat any opinion expressed on the BeanPod as a specific inducement to make a particular investment or follow a specific strategy, but only as an expression of their opinion. This podcast is for informational purposes only.